Good afternoon to everybody. I think hopefully it's going to be a very interesting session. I would like to thank Mr. Satyan Jadeja, who did a comprehensive presentation on digital banking and neo-banking especially. And I think it's a good where to start. So, I think all this is about customer. How customer-centric are we in providing services, which is where all these digital pieces are coming in. Because the whole problem is people don't want to waste their time, go to a branch, wait in a queue, fill a form. That's past, that's history. So how can modern banks or current day banks can fulfill this requirement for a customer without even going to a branch? I think that's where simply what this is, even to open an account, let alone apply for a loan, right? So I think Satyan presented the use cases, examples, the opportunity in the market size, and in a Sri Lankan context, where are we and where are we going? So I think Mr. Arjuna Herath presented this question to the governor during his session. So I think the direction that the governor presented was that it's in the pipeline, among many other things, including digital currency or central bank digital currency. So with that context, I would like to, because of the time limitation, I would like to drive into the questions, to the panel. Since Satyan set the context, I'll ask the three panelists physically here to sort of expand what Mr. Satyan Jadeja presented. I would first move to Mr. Tyagaraja. As all of you know, he's a very experienced banker and has been MD CEO for 3 banks for over 2 decades, if I'm not mistaken. And with his experience, I would like to first ask Mr. Tyagaraja, you have been the leader for several key banks over the past 2 decades. How do you think Sri Lanka should move forward in the areas presented by Mr. Jadeja?
Thanks, Chana. I think from a context of, if you leave the digital banks separately, and if you look at the other 2 extremes of neos, which is really fintechs, and the conventional banking, I think over the last perhaps decade, we have seen some of the legacy conventional banks progressively adapting in their own way bits and pieces towards online, mobile commerce, and elements of digital banking. And I think we have at least one clear example of a local bank, mid-sized bank, which chose a few years ago, like the SBI YOYO solution, to create its own separate solution. I think that is also in that particular panel there, that particular brand, to differentiate itself from the legacy offering of that bank, which was, I think, a progressive move. But I think we are still a long way in terms of what we see in terms of a Asia-Pacific competitive landscape. And I would just like to touch on maybe 2 or 3 enablers which we probably need. One of the critical elements, which I think this conversation has been going on for more than a decade, is about enabling this national digital ID. As far as I am aware, this conversation is probably now 15 years old. And we have a guy, again, if I can refresh, I think Satyan will probably agree with me. India, with 1.3 billion people, did this in probably less than 4 or 5 years. They failed initially. I think that time the Prime Minister or President invited Nandan Ninekanal, who was the former CEO of Infosys, to champion the project. They failed, they made some mistakes, but they went through a learning process and adapted it. And if they could do that for 1.3 billion people, with 22 million people, we have been messing around for more than a decade. And we've got to ask ourselves why. And it's still not too late. Right? I think that I think underpins everything else from fintech, neos, or digitalization, because that identity course. And if you really look at, Satyan will agree, I'm sure in India, when you get into the digital banking licensing or even NEOS, the RBI recommendation, it first says you need to have Aadhaar, and secondly, you need to register with GST. So they are also sorting out your indirect taxation part of it as well. So there are use cases next door. We don't have to look elsewhere for us to follow. We don't have to innovate. All we got to do is to follow. So I think it's to do with the will. It's to do with the will. Policy making will has to come in. I'm sure banks are all going through their own set of challenges with the environment. But while they are going through their challenges, management teams, guys like you guys, can parallelly work towards this. And the same thing also to recognize there's a fintech ecosystem which has been thriving over the last probably a decade. We should encourage them and allow them to coexist with the conventional banking services. That is the way I think we will allow this financial system to become more progressive.
Thank you, Mr. Tyagaraja. I would now move to Conrad. Conrad, you are part of a regional financial conglomerate, which is a LOLC group. You have seen the progress of many financial sectors in other countries. What can Sri Lanka learn from them to move towards digital banking and finance, even towards neobanking? What is your opinion on that?
Thanks. Thank you for inviting me. I think if you really look at it from a Sri Lankan perspective, I think we have a lot to offer. We have done a lot of things in the first stages, whether it's RTGS or whether it's the linking of all the banks in terms of the Just Pay and SEF system and all that. We have done a lot of things. So when I compare with what is happening in the outside Sri Lanka, where we are experiencing, is sometimes what I totally agree with what Tyagaraja said, in terms of one of the missing pieces is the digital identity, or the identity that which can be verifiable identity. But having said that, I have seen a lot of other things happening in some parts of the world. They are progressing especially in the African region. If you really look at it, they have not gone into a digital identity yet. And even sometimes the connectivity, we are talking about 5G, but the connectivity is a bit of an issue. But their identity, at least they have gone into a verifiable stage. Today we have an identity, its verification is a bit of a problem, even though that APIs are open or we can do that, but it is a bit of a stage where very difficult to get the identity verified. So at least we need to move on that direction. So we see progress in these countries, whether we want to be a fully digital identity or not. I think they are enabling that part of it for I think the banks and the fintechs to move forward, which is very, very important in terms of moving. So I think that's one thing that I see the major differentiator that I think that Sri Lanka needs to look at.
Thank you, Conrad. So I'll move to Randil. I think you come from, I think Mr. Tyagaraja touched on that. Your bank was sort of involved in a pioneer initiative in establishing a digital banking solution like FreeMe, right? Could you sort of elaborate on how did this come about? I mean, what was the thought process?
Right. Thanks for inviting me, and I'm glad to be here. I think when we started off in, I think 2017 or so, we saw a unique opportunity where the market is heading, and we wanted to have a seamless banking experience to the Sri Lankan consumer. So the team at that point, looked at the opportunity and looked at all the challenges that we had at that time, and decided to set up a separate unit. Under the same bank though, but we set up a separate unit to champion some of the customer-centric solutions that was required in the market at that time. And also, I think we worked very closely with the regulator to model some of the solutions, which we did at that time, and the regulators were very supportive to do that. And we are today, we are very glad that we championed some of those main solutions, including account opening, eKYC, BKYC, even in 2017, to do that. I think, that was the unique opportunity that we created in the market, and, and helped everybody else around to go that space. So I think that was a thought process behind that, and we'll continue to champion that cause.
Thank you, Randil. I think, I mean, that's a classic example of how we can move in that direction, even with so many challenges and infrastructure not being there. I'll now move to Satyan. You actually presented a lot of facts, figures, and worldwide examples. So, in your opinion, a small country like Sri Lanka, even though small, we have a well-established financial sector. We are a very well-banked country. Meaning we have many banks and many customers, having bank accounts. How should a small country like us, especially from a regulatory perspective, how should we embrace this concept? I mean, what is your opinion looking at the other countries?
Thank you. I think I think Sri Lanka is a very well banked country. What we really need to look at is in terms of, say, one is that how many percentage of population is unbanked in Sri Lanka. That is one part. The second part that we can really look into is the aspect of, even if you are a banking customer in Sri Lanka, how many people have, population of Sri Lanka has access to a formal credit. And this access to a formal credit is one of the biggest challenges emerging countries do face, whether it's India or Asia Pacific emerging countries, Africa, Latin America. So that these are the two factors that we really look at it. And from the regulator perspective, when you go more digital, the sense of consumer protection is also very paramount from a regulator perspective. So the regulator has to, at one point, create guidelines or guide rails for innovation in banking products and services, and give that kind of a state-of-the-art consumer experience to the banking customers in Sri Lanka. That is the one part. But at the same time, they have to ensure the protection of the consumers against fraud, anti-money laundering, identity, cyber security thefts. Those kind of things emerge from a regulator's perspective. So for a regulator, I think what I can tell you is that in India, for example, the central bank or the regulator here, they came up with this whole video KYC guidelines. So that way you are saying, okay, we can do digital on as a guideline itself. So that way the banks or the fintechs can adopt those guidelines which help them to go digital. The second guideline they came about was about issuing digital lending guidelines, because earlier, whether you go for a home loan or a car loan, there was significant amount of paperwork required to get a loan. Now with these digital lending guidelines, you can actually process a loan request digitally. And the third is the aspect of virtual banking licenses. So while India has been cautious about it, but other countries are issuing commercial, whether it's retail or SME banking licenses for virtual digital only banks, including Singapore, Indonesia and all. So in that sense, I would say that regulator, these are some avenues, but at the same time keep the consumer protection and anti-money laundering and theft and cybersecurity protection at the core of any regulation. This will definitely accelerate the adoption of digital banking in Sri Lanka. That's what I feel.
In terms of why we need new banking or digital banking is obviously, and fintechs are pushing the boundaries, is obviously because I don't think we have reached where the consumers are treated the way they should be by the existing infrastructure and the ecosystem, right? So with your experience in banking sector in Sri Lanka, Mr. Tyagaraja, what changes should the banking sector make to provide greater convenience to consumers, which probably they are not providing right now?
So I'll pick on maybe 3 or 4 points. If I pick on what Satyan said in terms of India, one very positive thing which the government did was, I think, Satyan, they have probably launched now around 75 digital banking licenses in the 29 districts and the 8 union territories, right? Government has given the lead, so that there is at least one digital bank unit in every district in the country. So the lead has been given by the government. It's up to the private sector to follow. That was the first point. The second point I would like to make was, the credit scoring. When you look at consumer credit, the way somebody would look at if a guy wants to go and buy a clothing on a buy now paying later, or to take a mortgage in this country, the conventional banks have to go through the same credit scoring on crib. But I think what the fintechs are doing, and maybe the neos are doing, they are studying the mindset and the behavioral pattern of those who go into the fast-moving consumer goods and writing algorithms to suit that, which is quite different from the conventional crib scoring. And you see chalk and cheese. And I think that is an opportunity, I think, even here locally, we should look at. If not, you are passing the same judgment, and very often you are excluding a segment of people, especially the younger segment, who are looking for a better experience. So they'll go away. I mean, if I look at my own 2 kids, ever since they went to university in the UK, even though we opened accounts for them in Barclays and NatWest, both of them immediately from university opened accounts at Monzo. And today I would say 95% of their transactions on Monzo, they just keep a marginal amount in the legacy banks and do all their transactions here because of the ease and convenience. And that's happening here as well. That will happen. So one has to look at that. And the third burning thing in this, I don't know whether it was taken up by the governor in the morning, but it's the elephant in the room. It's the issue on the metaverse. See, while we are still saying we are not ready or we are still deliberating, I'm told, subject to correction, that Sri Lankans as a population on the world, apparently we are in the top 10 consumers of NFTs and playing into crypto, right? And if that is true, what are we doing here? Excluding and postponing the agenda, the conversation here, while the consumer has already gone into that space. So at least there is an opportunity, I think, to at least learn or experiment and start a process. And maybe the last point I will make is regarding the regulatory sandbox, which we have here. And if I compare it with the neighbor, I mean, in India, I think you have the neos banks, as you quite rightly said, which are not regulated, but guidelines are given by RBI. You have the conventional banks, and then you have the digital banks, where before they get the licensing, they have a differential capital allocation. I think it's 20 crores, which is about $2.5 million. They are given that once they go through the sandbox, right? Whereas for the legacy banks, for the big banks, it's 1,000 crores. And then you have 300 crores, I think, for the small financial banks. But the neos are also adapting the regulatory framework. And I think here we need to really see whether we have to always go through the central bank. Now, the Monetary Authority of Singapore, subject to correction, I'm told they are now encouraging sandboxing without having to go through a bank. So effectively, you're not stifling creativity. You're allowing these guys to directly go with the regulatory authority into a sandbox and experiment. So I think that discussion should also take place here to see what is best for the country.
Thank you, Mr. Jagaraja. So I think hopefully our discussion is forming into something hopefully to make it more practical and where we should be going. So coming back to Conrad, Conrad, you are spearheading a fintech solution company, which iPay. And based on your experience with in deploying technology and going after consumers, what advice can you give the potential fintech companies in Sri Lanka? What should be doing? I mean, we have seen a lot of Me Too's, right? I mean, somebody does something, 10 guys try to do the same thing and fail. I mean, we saw that in Pick Me and Uber case, there were 10 other ride-sharing companies and we can't even find those names now, right? So what is your advice to the new fintech guys? What should they be doing?
I think, as Rajendra said, I think there is so much of opportunity in this area. I think I think all fintechs needs to look at what is that from a customer perspective. In my view, what is the job to be done or the problem that we need to solve, and play on that line only rather than being a Me Too. We have seen so many Me Too's in terms of even in the payment side. So I think the payment is not the only problem that the customers have today. Yes, payment is one of the problems, but I think Mr. Tyagaraja mentioned about so many things with regards to what the banking services are. So if you really look at it, I think there is a famous image which shows a bank's all the services, how many fintechs are being challenged in terms of each and every service offerings that the banks does. So that is, it's not only one single fintech who's going to do everything, but different fintechs, different solutions that which can be serviced by a fintech. Because what is required in today's context is the job to be done for the customer. Customer requires one job to be done, and that needs to be perfected. But when we try to do everything, I don't think that we can do a better job. So that's something that the fintech should look at it, rather than trying to offer everything what the bank does in one single app. Yes, today we are talking about super apps and the super app concept has come in. But I think the Sri Lankan market, if you really look at it, it's a very small market. Fintech try to do everything for this market. It's going to be a challenge, because I think the investment requirement as well as your the compliance requirements and to do everything in one single app, I think it's going to be difficult from a Sri Lankan market perspective, unless otherwise they look at a market much more bigger like India or any other market. So I think what is important for the fintech is to concentrate on what they are doing at best, and then we have several examples in Sri Lanka as well. They're doing they are even though they are in the payment system, they're concentrated on one particular thing and doing very well. And as we know, they are coming closer to be a competitor in terms of the number of transactions they do vis-a-vis with the banks. So I think that's something that the fintech should concentrate on.
Thank you, Conrad. So I'll now move to Randil. Randil, you and as discussed, I mean, you have been sort of pioneering or in the area of like this digital banking with some of the solutions that you have deployed and implemented. I mean, I'm aware and I'm sure you have faced lots of challenges at the beginning and now, and even also in the future as well. So what are sort of the challenges that you have faced, and what sort of have you done to sort of overcome some of them, just to for the benefit of the audience?
I think there were so many challenges right on the way, but I think a few things at a concept level. I think still Sri Lanka is, with digital banking, cards, and all those stuff. Still, Sri Lanka is predominantly a cash economy. So still people will ask for cash, and cash cost is very high. I think Governor spoke about in the morning. Adapting from cash to digital, still. There has been a little bit of a lag in terms of the investment required, as Conrad also mentioned. So I think that is one challenge that we've continuously faced on, what the use cases that we can implement and the support system that we can get to, challenge cash. So I think that is one key issue that we've experienced. I think other one, I think the previous panel also discussed about the digital literacy and the adoption across. So I think, example, India had demonetization, or at least Sri Lanka, previous session said, we had the fuel crisis to adopt digital. But I think the whole QR going across and, doing that had helped the digital transactions. But I think the adoption as well as the knowledge of the consumer, is still challenging. One other thing that we've faced is the different roadmaps that different organizations across Sri Lanka has. I think Central Bank has a clear roadmap on the digital payments part, but different government organizations have different other roadmaps. The interconnected, ecosystem is very hard to get in Sri Lanka. So I think as a result, when you go and implement a solution, it's not interoperable, or there are other issues that we face. So ultimately what happens is the customer is inconvenienced. So customer has to log into multiple applications, to multiple platforms to do just one transaction. So I think that is a huge challenge that we're facing even now. And I think, I hope that with all the effort that all the banks, FIs, plus all the fintech companies putting together and working together in this area, and the central bank also supporting, I think that's something that we'll have to overcome very soon.
Thank you, Randil. Yeah, I think I also try to, agree with you in terms of, I know the recent budget, the government announced that by 2024, if I'm not mistaken, all the payment to government departments are mandated going to be digital. So, when I saw that, I was trying to think what are the challenges we are going to face to implement that in that time frame, because the amount of challenges that we as a collectively as an industry faced into move to this area, current state, sort of mind-boggling. Moving back to Satyan, so from your presentation as well as the data part that we see, more and more neobanking and digital banking licenses are being given in the region. I think as per the governor's statement in the morning, Sri Lanka also is looking at that, and it is going to come. It's just a question of when, right? So in that sense, I think Mr. Tyagaraja also touched upon, the traditional banks, or the finance companies who's doing traditional business. So how should the financial sector sort of prepare for these challenges that are coming? It's going to come, and how should they prepare? In terms of the traditional banks, should they open a separate neobanking, digital banking, or should they sort of alter what they are doing, or what should they be doing?
So there are, from an incumbent bank or existing bank which are operating in Sri Lanka, they can adopt two-way strategies, and as it was rightly pointed out the esteemed panelists, is in terms of how we can give a better customer experience. So whether it is a neobank or an existing bank, their objectives are same, and one moves with agility and speed to address leveraging a set of enabling technologies to address those needs, whether it's in payments, remittances, loans, right? So in that situation, I feel that the banks in Sri Lanka can prepare in one is that they can carve out a digital banking unit in the sense that they create a brand and take it the digital all way and rapidly expand, what like State Bank of India did, that they created a YONO brand targeting the millennials as a customer base and how we can quickly serve them. Today, in 1 month, they are almost giving $1 billion worth of personal loans as such. So that's the rapid scale of pending customer needs it is rapidly addressing. So that is one way to address it. Second is that modernize, digitize, automate your existing bank processes, part of it. Third is partner with fintechs, because fintechs are growth innovation engine for the bank. So fintechs can bring in a lot of new set of capabilities. So bank can partner with the fintech to offer a more value-added offerings to their customer base. Also the element of apification. So whether it is a fintech or any authorities, participating authorities, if they can apify their services and offerings, that way bank can quickly create this whole API fabric to integrate and offer very enriched offerings to target customers. At the same time, also protect them from any, because as we go more digital, you need to be very cyber secure in terms of your approach. As digital will have its own set of cyber security threats. So the bank should prepare also on creating robust zero trust security models to ensure and protect the consumer as well as the bank's systems, right? So these are four areas I feel. Digitize existing processes. Either you can create a brand or a digital initiative on which can stand on the feet on their own. Third is fintech into partnerships, and fourth is keeping your whole system secure and protecting your consumers against all the cyber crimes, right? That these four areas are very important for Sri Lankan banks as we go. And the whole creating that API fabric, because we are moving more and more towards the whole API economy. So API will provide a very seamless buy versus build capabilities, right? Rather than I build up something grounds up, if I have an API which provides me the same capability, I'll just take that API and quickly offer a product or a service to my customers, right? So buy versus build is with the power of APIs is very important in this thing. And then the regulator will, I think regulators are moving very quickly, whether it's in central bank digital currencies, digital lending guidelines, KYC, anti-money laundering. So be ready to address those changing regulations very in an agile way and in more compliant way. So that way your compliance part is also addressed very systematically.
Thank you, Satyan. I think I'll I'll again move back to Mr. Tyagaraja. So you've been a part of many large banks and also finance companies in terms of the boards in that, and you have seen how the banks work and function. You have many experiences. I mean, do you think the banking sector, the traditional banking sector we are talking about, are they really agile to move with the pace of change in technology that is happening? If not, how should they adapt? I mean, what is your opinion on that?
So I think the word agility itself is relative. And if you look at Sri Lanka, you have seen different extremes. I think you saw one brand or one bank which chose to actually differentiate a brand, commit some capital, and support a team from scratch. That was one good story. But on the other hand, some of the bigger banks are still having legacy challenges. The issue is really the bigger you are, the rigidity, and to what extent you are able to unshackle some of those things to meet the pace of agility is point one. Secondly, also, fairness to all people who are here in terms of representing management, you also have banks which are governed by boards. So it also depends to what extent the boards are diverse enough to have people who understand the need for agility and who are able to also respond to that need. Because if that is not there, you're not really going to be able to get the deployment of capital or that sort of stuff. The third element would also be in terms of given the current, of course, country situation, to what extent are banks really in a position to deploy capital. And I just would like to cite an example of what India has done pretty well. The neos have literally gone completely out on their own. And Satyan might be able to correct me, but I read somewhere that in the last 18 months, they have raised in excess of $600 million purely through private equity with the likes of Secua, the big names, right? Now, I'm not sure to what extent the local market has started to embrace private equity in this space. Because the conventional capital is used to a different profile of risk. And I think this requires also a different quality of capital, which appreciates a different element of risk. So I think that is one conversation Sri Lanka will have to take forward about the ability to engage with a different quality of risk capital.
Thank you, Mr. Tyagaraja. So I think there's a lot to learn by the the current incumbent banks in terms of looking at how they would be challenged and what they need to be doing. I think that's sort of a big lesson to learn from other countries. So moving back to Conrad, so from the looks of it, we are on that in that direction of moving into whether it's new banking, digital banking, or payment banking license regime, and I mean, I've seen you speak in many forums about these issues as well. So provided we get few challenger banks coming on board, right, and challenging the incumbents, how do you think the financial sector landscape in Sri Lanka would change? I mean, what would happen?
I think, in my personal opinion, I think it's going to be a very challenging time for some of the banks who are not thinking outside the box. But I think at the same time, I think there will be a lot of opportunity created to look at the bank's operating model, right? So I think Satyan touched on this quite well in terms of what is your bank's operating model. I think in the first place, of course, just like the consolidation, what has happened in the financial services sector, non-banking financial services sector, I think there is a requirement of certain number of consolidation that has to happen in the banking sector as well, looking at the size of the economy and looking at the opportunity that is there in terms of servicing. So then the banks can really define what is the operating model. I think there are a lot that, as Mr. Tyagaraja mentioned, with the partnership with fintechs that the banks can do a lot. Because that innovation doesn't happen at most of the banks, right? So you can't blame the banks. It's because of the structure that they have to operate, the regulatory requirements that they need to look at. But I think outside that, when it comes to the customer service side, I think there is a lot that the banks can innovate together with the fintechs or together with the partners. It's not only a fintech, I would say all the partners. So I think that it's going to be even with regards to the capital that which Mr. Tyagaraja was mentioning, will definitely come into the country if the opening of neobanks and the licensed digital banks. I think now, in a traditional sense, I think there are enough and more banks, enough and more financial services companies to service. So I don't think that we can attract capital to the country or even private equity to the country for those traditional players. So if you open up, certainly there will be a lot of opportunity which is going to come in our way as a country where the country needs that kind of investments too.
Thank you, Conrad. So,
if I may add in, Conrad.
Yeah. So moving to Randil. Randil, you've sort of been again a pioneer in terms of providing this digital banking type of solution, to make it sort of like a seamless consumer experience. I think that's where the crux of the matter is. So where in your opinion, in this direction, where do you think the financial sector in Sri Lanka would be in a few years' time? Where do you see it going?
Okay, I think we've discussed a lot, I think, in the panel as well. I think more or less everybody was talking about how the news have impacted the large players and, across the world, how it's working. But I think Sri Lanka as well, most of the startups as well as, smaller fintech companies are working with some of the larger banks. And invariably, I think that all those working together will influence the way that the larger banks operate. So I think that, example, when we did FreeMe, I think the impact that it had on Nations Trust Bank today, has a huge impact in terms of digitization as well as, customer impact. But I think the whole industry is moving towards that. And I think in the future, we will see an element of humanized banking, which will be, centric towards, the customer-centric banking. I think that is. I firmly believe that will happen, and that is continuing to happen now. Is starting to happen. So I think everybody is, all the larger banks as well. I'm privy to some of the things that is happening, but I think that's a great thing which we're heading. I think other thing is we call a share of life. Because just like in some other countries, banking is no more a place where you go to an app and do fund transfers. So I think Sri Lanka will have to adapt to be a day-to-day, service provider or banking within the customer's day-to-day life. So which we call share of life. So the customer will operate in multiple digital platforms, but banking will be, the success of banking will be if we can be, relevant to that customer in their own digital platform without being, restricted to one single platform. So I think that is where we are heading, and I think that'll change Sri Lanka. Also, I think the interoperability across banks, I think, organizations like Lanka Clear provide some of the infrastructure for interoperability. But I think some of the shared KYC options and some of the startups as well will force the banks to come into interoperable platforms, which will ultimately give the convenience to the consumer. Just like in some other countries with open APIs to enabling some of the fintechs and the actual large banks becoming the enablers of them. So I think that is I think that we think as a that will happen in Sri Lanka, and I'm sure all the banks are heading that way now.
Thank you, Randil. I'll just, with the time constraint, I'll just move to some of the questions. Actually, there's a very interesting question that has come. The question is basically, all of us who have been consumers of banks in Sri Lanka, and we have also seen how it happens in other countries. So the question is, in other countries, I am treated as a king when I go to a bank, but in Sri Lanka, I'm treated as another king. In English, it means, get out of here, right? So I'll open up to all three of you with this experience. Is that true? And if not, how should we handle this? Mr. Diagaraja, you can start.
Well, I do tend to agree with you, but also agree to disagree. I think there is two extremes to it. Yes, there would always be examples of dissatisfied consumerism, but on the way I would, having run at least 2 of the 3 banks I ran, which were listed banks, I would say in the long run, there is a positive correlation between your share price and how you treat your customers. It's not a short-term thing, it's a long-term thing. So it depends on the attitude.
So I tend to agree with Mr. Diagaraja, as well as I think today Satyan mentioned very clearly, the customers are looking at the hyper-personalization. So that is why that word has come. I think everyone wants something for themselves, something unique for themselves rather than a common service. So hyper-personalization means knowing your customer better. That you can't do by just opening a bank branch or just servicing from the counter. It needs to know more about the customer. So I think that's where the digital plays a bigger role in terms of identifying the customer and providing a hyper-personalized solution. So that is what the expectation of the customer. I think that question is about the expectation of the customer. So whether our today's banks are meeting that expectation is the question.
I think with hyper-personalization, I think one other thing that we need to focus on is the digital-ready human capital that we have in our banks and organizations and FIs. No point in having so many platforms or enablements if our staff is not digital-ready. So I think the expectation of the customer and the delivery of that from the staff or the backend or our platforms is as good as the imagination of the people who built it. So I think that is a key challenge that we'll have to address by making our human capital digital ready. So I think that will solve this, king, and I'm sure that will be king after that,
Thank you. I think we'll probably have a chance for one more question. I think the question is, we are talking about digital banking, digital payments, all that. But I still have to go to banks and sign physical forms. When is the day it's going to come? I can do this from home, or everything, so because people are talking about submitting everything to the government electronically, but I still have to go and fill forms and do that. Are we going to come out of that? What's the direction?
I'll tell you the simple answer to that. It's probably not going to be for this age group. It will be for Gen Z. There will come a time when you're teenagers and you're 20-year-olds, because I have my second one is 24, and she thinks twice about taking a flight today because she's so passionate about carbon footprint, right? And there'll come a time when these kids, when they start to bank, they will start to demand and say, what is my carbon footprint? What have you as a bank or a financial service provider done to minimize? That will eventually come. It won't come today, but that pressure is already beginning globally. It will eventually come to Sri Lanka, and FIs will be compelled. It will only be a matter of time.
I think we have been trying to do this for quite a long time, right? So I think we managed to do digital bank account opening without any signature. We have managed to do fixed deposit with digitally. So I think it's a consumer requirement, right? So or the customer's requirement, as they said, the next generation. If you don't do that, there won't be customers for you. So I think the banks and all of us have to think. Of course, there are challenges, legal challenges, and our thinking process needs to be changed in terms of that. So there are a lot of challenges that we need to overcome. But I think that's a journey that we need to take.
Yeah. So I think as at now, most of the banks are on that. So answer is yes. And if you take ours, we are at about 90% on without signature on all products, consumer products. But I think with Lanka Clear is looking at the digital signature part as well. And when that goes fully live and some of the other products, I'm sure within the next year, I think at least 50% of the banks will have paperless onboarding. I'm very confident about it, and I'm sure that all the banks, I'm talking on behalf of all the banks here, so I think banks and FIs. So I think it's a yes.
Right, thank you. So I'll just give the floor to Satyan for any last comment, because I think we have run out of time. What are your last thoughts?
Yeah, I think I think it's a very accelerating journey of digitization for sure. As our panelists did mention about how rapidly the digitization happening, and maybe by next year you will see most of the Sri Lankan banks accepting digitally, and obviously with a lot of good guidance from visionary regulator, then it will rapidly expand. I think one very simple example that comes to my mind is that you have a daily vegetable grocer, right, who needs maybe he needs a credit for 2 days, right? So today still the banks don't cater to those kind of informal credit world, right? And when you have this kind of digital world coming in and fintechs coming in, we can start addressing the genuine needs of the people for their business and what they do after they have the bank account, right? So we have a lot of innovation happening in that area. So like within 3 clicks, if I can book a Uber cab, people are expecting within 3 clicks, can I get a 2 days credit? And that's the expectation now. And that's what the banks and the fintechs will work towards in the coming years, to really see what each individual needs and how we can cater to them in a very rapid and digital way to address their needs. So I think we have a great adoption of digital in Sri Lanka, as mentioned, and I think it will more accelerate in coming years for sure. So thank you for that.
Thank you, Satyan. Thanks for those last comments. Thank you for the wonderful panel who shared their experience and expertise. And hopefully, when we meet the next year on Sri Lanka Internet Day, we probably have a better story than what we have today. And let's hope for that, for the sake of the consumer, who's going to be more digital than what it is now. Thank you very much. Thanks for audience, a super audience. Thank you.